If you own a rental property and you're just really tired of being a landlord, then you should stay tuned and listen. Hi, my name is Orna Arid. I'm with Elite Residential Realty, and today I'm talking to Dr. Daniel Rubin. Could you please introduce yourself?
Hi, my name is Dr. Daniel Rubin. I am a retired medical physician, and I've been fortunate to be a very successful investor in real estate and other issues. And now I advise people on their investments and very tax-efficient type investments when I concentrate on.
Why are so many long-term rental owners feeling the pressure right now?
Being a landlord, I can say personally and from clients, is getting harder and harder. Regulation, especially in California and probably elsewhere as well, it's becoming extraordinarily burdensome. There are more and more laws being written that protect the tenant at the expense of the landlord. Landlording has become a full-time job to those who just wanted it always to be part-time, so people are getting tired of it.
At what point do owners realize they want a different solution?
Usually when something happens. Most people have probably owned their properties for a long, long time, and they've had the energy to deal with it. Usually it's something, they have a problem with a tenant, they have a big capital expense. Something happens that'll trigger it, and they realize that maybe they don't have the kids that want to take over the management of it, and it's become too burdensome. So they start thinking about what they can do about it. But what stops them is that big tax burden if they sell.
So for somebody that's hearing this for the first time, what options do they have if they do want to sell and avoid the tax exposure?
There is something that is right there and has been for 100 years in the tax code. It's called Section 1031, which permits you, if you have a rental property, to do an exchange. You sell the property that you have, and then you immediately purchase another property that will allow you to avoid tax completely if that property that you purchased to replace is at least the same value or greater than what it is that you sold.
But this way, they're really not getting rid of the headache of being a landlord. So what other options do they have?
Exactly. That's the trick. They go, okay, I'll avoid the tax, but I'm just exchanging one headache for another headache. So there is actually a solution that is available that is not sufficiently well known. And for the right people, they'll find a lot of relief by getting to know what it is. And that is, they can exchange their property for completely a passive investment in real estate. That is, they'll buy a fractional piece of a much larger institutional grade property where it is managed for them. It is in essence a passive investment. It enables them to completely defer all their tax. It permits them to retain the value of their real estate wealth, as well as continue to get rents and continue to depreciate the value as they had before. So it gives them a lot of the benefits of ownership of real estate with no tenants, toilets, trash, or any other landlord-associated difficulties.
So I was going to ask you, how is that different from owning a rental? But I think you pretty much answered my question.
Yes.
This sounds very appealing, but I know it's not for everyone. So who is it typically for?
First of all, it's for people who have owned the real estate for a while and have appreciable value. Therefore, they need to avoid the tax. That's number one. Number two, they don't want to deal with the day-to-day landlord responsibilities anymore. Another issue is that they are okay with not trying to make a killing in real estate anymore. They want to be able to purchase a piece of property that's stable, that the goal is to maintain its value and to give you consistent income while deferring the tax. And you can defer the tax for estate planning purposes until you pass your wealth on, where your heirs will get the step up in basis, they'll be able to sell and not be liable for any income taxes either. So for the right people, usually a little bit older, that have owned real estate for a long time and just don't want to deal with it and don't have any heirs who want to deal with being a landlord, it's a wonderful solution.
What if they want out at one point?
These DSTs usually have a life anywhere between 5 and 10 years. But there are other solutions that will give you more liquidity, probably a little bit more complicated, But there are solutions that give you some greater liquidity, usually within 3 or 4 years. However, generally speaking, real estate as an asset class, whether you own the property or you own it passively through a DST or otherwise, is a pretty illiquid asset. It is something that you can't sell a piece of. That's all or nothing. So, and this continues to be relatively illiquid with some provisos.
What are some of the misconceptions that you hear?
The greatest misconception is people feel that they're stuck with it. You know, they want to get rid of the landlord responsibilities in dealing with the tenants, but they don't want to give away half the profits that they can get from selling the property. And they feel that they're stuck. The ones that are a little more sophisticated know about 1031s. They ask that question, why exchange one headache for another? And they're just unfamiliar that there is another solution that allows them to defer the tax, maintain their real estate wealth, get the income without being a landlord.
Why is it important for owners to explore this before they list their property?
Well, for those who are familiar with a 1031, there's a lot of very strict timelines that you have to stick to. So you kind of want to know what your options are before the property is actually sold. You might have already listed the property. You might want to list the property. But prior to that, you want to be able to explore your options. And when you explore an option for a DST, the person who's an expert in DST, like myself, will need to make sure that it is a suitable thing for you to do and that it is in your best interest to do it. So they need to get to know you a little bit prior. They need to look at your balance sheet. They need to look to make sure that it's a suitable investment, unlike just a transaction where you buy or sell something. They are responsible to see that it is a suitable investment that is in your best interest. So it takes a little time. So as soon as you list your property, you should also look at your options.
For someone who owns a rental for many years and is feeling stuck, what would you suggest as a next step?
The best thing to do is to contact Orna right here. You need to list your property, and then we need to work together as a team to look at your options for replacement property.
Could you cover a little bit of the timelines of how it works, how many days they have to identify to close?
Yes. Once you close on a property, the important thing is that the code says that you cannot take constructive receipts of the funds. So what you have to do is you have to make sure that the funds go from escrow to what's called an accommodator or qualified intermediary that handle the 1031s. The money sits there. You have 45 days to identify a property that you're going to purchase, and then you have 180 days from the date of close to actually purchase that property. And that timeline is not negotiable. It includes weekends, holidays, illnesses. It's hard to negotiate with the IRS.
So in closing, anything we didn't cover that you would like to add?
Yeah, just in case it is an issue for some people, if you have debt on your property, the other thing you have to do in a 1031, you have to also either put in extra equity or you have to also replace that debt. So you have to apply for a loan and get underwritten. When you do a DST, we find you a DST with at least the same amount of leverage, and you don't have to go through underwriting. You don't have to qualify for another loan. It is done for you, and it's non-recourse to you. So it's really comforting for people who also dread getting another loan, another real estate loan. You don't have to do it.
If someone has any additional questions or want more information, please feel free to reach out to either Daniel or myself. We'll make sure we answer any question you have. We can always set up private appointment and address your situation. Is there anything else you want to add? Is there any disclosures you have to give?
Yeah, you just have to give some disclosure. The discussion is for educational purposes only. Every case has its own issues. Any legal or tax advice, you got to use your advisors to help you with that. That's pretty much it. Looking forward to meeting all of you.
Well, thank you.
All right.
Thank you.
Thank you, Orna.